Welcome back. You're still tuned into Power Breakfast. We've gone through the global picture, so let's now talk about all of the cues that you should track from a domestic standpoint. We have our research team here to prep you up for this final trading session this week. Nigel, Vivek, as well as Surbhi are all here to take us through exactly that. Guys, a very good morning to all of you. Vivek, coming to you first, take us through, all of the cues that we should watch for the markets today.
Well, good morning. Absolutely a very important trading session. A lot of cues. What's actually happened overnight, like we mentioned, that the US market ended with minor gains, still quite significantly off the session highs. Oil prices too yesterday saw a bit of cooling off, and that's something that is quite positive given the fact that Brent futures yesterday were down over 1% and WTI futures too down close to 2%. Now coming closer to the Indian markets yesterday saw quite a seesaw session with a lot of earnings, a lot of news flow, as well as the RBI MPC policy, and markets reacted to all of that by actually closing quite significantly in the negative, largely dragged down by financials. Financials were impacted by the RBI MPC's announcements of incremental CRR requirements that saw significant selling pressure across most of the banks. Now, result reactions today, yesterday post-market hours, some significant companies, and the reactions there would be important to track: Hero MotoCorp, Concor, Apollo Tyre, amongst a whole host of others. And today, too, some important results that we would be tracking: Apollo Hospitals, JSPL, ONGC, ABB India, as well as Hindustan Aeronautics. Now, early morning today, in the wee hours of, today morning, MSCI has gone ahead and released the list of stocks that have been included as well as excluded as part of the August, review. Key stocks that have been included: PFC, REC, Astral, Cummins, Ashok Leyland. Two surprises here, Supreme Industries as well as REC are quite surprising. IDFC First Bank as well as HDFC AMC make their entry into the Global Standard Index, while ACC would be an exclusion. So all of these stocks, to expect them to react quite sharply in the session today.
All right, Vivek, thanks a lot for laying out all of those cues for us. But let's talk about some more of these individual names that, you should watch for in today's trading session. We have Surbhi here with the list. Surbhi, Hero is, clearly the most important one, especially after that solid set of numbers.
That's true. It was the results were above estimates on the operational funds. The margins were up 260 basis points, came in at 13.8% versus 11.2% same time last year, and it's the fourth consecutive quarter of margin gains. Biocon, the revenues were up 60% on a year-on-year basis. The EBITDA was up nearly 80%. Margins came in at 21% versus 18.7%. Manappuram Finance, again, the numbers were a beat when compared to the poll. The AUM was nearly up 21% on a year-on-year basis. The gold loans were up 0.65% on a year-on-year basis, but up 4% sequentially. Honeywell Automation, they saw revenue growth of nearly 19%, but margins have contracted to 13% versus 15.5% same time last year. SAIL, it was a mild beat on the operational front. The realizations were up 1% sequentially. The revenues came in above poll, came in at 24,360 odd crores. The EBITDA came in at 1650 odd crores. LIC, it was a weak quarter. The total APE was down 7.2%, and the VNB margins were largely flat, came in at 13.7%. Apart from that, HCL Tech will also be on our radar today because the company signs a mega deal worth $2.1 billion with a Global 100 corporation. And lastly, Medanta and DLF will also be on our radar because they've entered into an understanding to launch a 400-bed multi-super specialty hospital.
All right, Surbhi, thanks a lot for that long list of stocks. In fact, since we are speaking of stocks that you should keep an eye on, Cipla chairman YK Hamid, in response to 3 shareholders' concerns on stake sale by promoters, said that all reports of stake sales by the promoters are speculative. He said, and I quote, "I would like to inform you as the chairman of Cipla that all the news that you are hearing is speculative and that all the clarifications for this have been made to the stock exchange. And whatever information is given to the stock exchange is in the public domain and public knowledge." Just to remind our viewers, YK Hamid owns 18.68% of Cipla as of the 30th of June, and the Cipla family held a 33.4% stake in the company as well. So that's an important update coming in on Cipla. But with that, let's also move on and bring you all of the cues from the futures and options space. Nigel is here with that. Nigel, looks like the start could be in the red, but take us through what we should watch.
Well, that's right. Morning, Pavitra. The start is going to be in the red, and I think the temptation today is to go ahead and buy the dip, because that's worked in the last few days. It's down close to around 50 points. Maybe if you get a 70, 80 point downtake, the risk reward could favor you with around 19,450 odd as your stop. Let's run you through the data points that came in yesterday. The short positioning yet again did see a build up. So we had more than 11,000 short contracts, and the short positions now go to around 59%. As I always say, I like shorts in the system. That's one of the reasons that you could see a bit of a bounce from there. Now, in terms of the options data, 19,600 call, 19,500 put. Both of them were fairly active. And keep your eye out on the premiums. On the 19,600 call, you add the premium, 19,500 put, you deduct the premium. Which brings us to the levels then. The 20 DMA, well, that's the resistance zone. So 19,650 to 19,670. As of now, the positioning is such that we don't get past that mark. But in the last few days, numerous times, you go down to around 19,425, you go down to 19,450, and risk-reward favors you at that particular juncture. The Nifty bank, well, that's been out of form, and that needs to find some form. So that's the broad 900-point range that you're looking at. Currently, it's hovering in the middle at around that 50 DMA odd. So as long as it's holding on to that 44,300 odd mark, you'll say that the Nifty bank is still doing pretty okay. You don't want it to break that mark. Otherwise, it slides down another 900 to around 1,000 points and it will visit the 100 DMA. So the implied start is we start off on the back foot with a cut of around 50 points. Someone will have to put their hand up and get counted. But as has been the trend in the last few days, 19,425, 19,450, maybe you take a bit of a punt and look to go long.
All right, Nigel, thanks a lot for taking us through all of those cues. That is the trade setup as we see it this morning. But with that, it is time for another break on the show. On the other side, we're going to talk